Welcome back, traders and investors. We have Nic Chahine on, creating income with credit spreads, and he's beating us up in the chat room because Dennis said that Apple has no other revenue. So
I said
we're,
half the revenue is iPhone,
yeah,
and I don't know where this other revenue growth's all coming from. And Nick says no other revenues. Where? Talk to us about Apple revenues, Nick.
Well, I heard you say that it has no other. It controls half the world music sales, half of it. All music sold in the globe goes through them. That is a pretty good revenue stream, I would say. Just to
Where
say
is
that.
the growth coming from? Because that iTunes was the thing that kicked it
The
all off.
the,
Apple
fly,
years
the
ago. That's
flying the flying car. It's coming. Hold
the
on.
flying car. The race car
The
driver
flying.
Nick knows about flying cars. I've been waiting. I watched Back to the Future back in the 80s, and I thought we would have flying cars by now, and I'm so disappointed in technology that we don't have flying cars. So you're telling me Apple is going to are they going to merge with Tesla and bring the flying car? Is that what's going to happen?
Yeah, a couple of weeks ago when they said somebody was talking to Tesla, I was like, oh my God, I used to joke about the flying car. Now I can't. So I got to switch to the hovering skateboard or something. I'm not sure. But,
my kids make fun of me all the time because I keep telling them. I mean, that's the future. What they're going to do is they're going to put like capsules over the road. Because obviously,
yeah.
because you couldn't control the. I mean, we're already missing, one airliner. Can you imagine if, little old ladies were out there flying around? But, anyways, Nick, let's get to the stocks. Are you playing the Apple today, or is it something you've had a position on?
Well, I've been playing it from the sense of, me, I do credit spreads, and that's how I like to risk my money. But on Apple, I'm not shorting it or trying to limit it with anything. So any position, my theory on Apple, and the members know that because I've had that opinion. If you remember, it got clobbered down to around the 500 level recently, and then it got defended hard by the company and other people stepping in and buying it. So my theory is the closer it gets to 505 on down days, the conviction of the sellers wanes, and so they get weaker as it gets closer to 505. So I'm very comfortable risking money at that level and lower with 2 to 3 weeks out. So I'm collecting premium on that. But
What
I'm
kind of
not doing
premium?
my usual.
What kind of premium are you getting
Well,
for like the 500s right now? Are you like selling the 500 puts? Is that what you're doing here, Nick?
yeah, but I don't. You know me. I don't like to sell the puts. I sell put spreads because I don't. I want to
That's
know
what
how
I
much
mean, though.
money I can lose.
Yeah, exactly. You're selling the put and buying a lower put.
Right. Yeah, and it depends on your activity level. If you're not that active in the market, you can sell it a month out and down in the mid fours and collect 30, 40, 50 cents. Depends on your how gutsy are you. So if you're an active trader, you can sell it this week or next week actually, since a couple of days are going to be gone after this morning here. In premium, hopefully the VIX get elevated for some reason, and then that'll help the pricing a little bit. But I anticipate the market getting a little bit anxious towards as we get closer to Sunday because of the Ukraine situation. So let's look at the March put spread to see if I can give you an idea. So the 510 pays you almost 29 cents. 510, 505. So you're risking $5 minus the 28 cents you're collecting, and you can watch it. So if it gets a little orange, then you may defend yourself somehow. So it's not that risky for an active investor. If you step out a week out from that, you can probably get under 500 and get about the same level of premium. So it all depends on your risk tolerance. And I don't try to do credit call spread in it, which is the bearish try to cap it just because of mornings like today. Somebody comes out and says something about it, or the flying car, proverbial talking car comes, and then you get blown out. So I don't anticipate bad things from it, but the good things may come at any point. So I do credit put spreads on Apple, but not credit call spreads. So I don't sweat the small stuff, the plus 10, 15 bucks moves, because I do these credit put spreads and I don't have to sweat the small stuff.
Nick,
But
are you on a speakerphone or a cell phone? Because we're kind of losing you here a little bit here. I'm just wondering.
No, is this better? I'll put my hand over the mic. Is this better?
Yeah, that helps a little bit. Yeah, actually, because we're just you were fading out there. Yeah.
Okay. No, I'll make sure to speak louder.
Yeah,
Somebody's here yet. So.
maybe that's a little too loud. Maybe.
No, you're good.
Yeah.
They're asking
Okay,
about Zynga. Hey, do you trade in Zynga? Do you ever touch Zynga there, Nick? Because in the chat, Morgan.
Zynga, I don't do it at all. Just because it's a headline stock. I can't play with headlines. They'll blow you out with regards to credit spreads. Although it's been on an absolute tear. And right now, I see, 3 of the last 4 candles are indecision candles. They're doji-ish. If you look at them where, the market opens it up, runs it up, sells it down, and then decides, I don't know what to do, and they close it almost exactly where they opened it. So if the market doesn't know, I don't know. I'm out. But it is an impressive move, and there's an open gap about, 25 cents lower to where it is now.
Yeah.
So
yeah, that's kind of open.
It's if somebody wants to play the small dollar stocks, I mean, it's as good a lotto ticket as anything. Speaking of lotto tickets, I think you were talking about a couple today, and I think was it Dennis? Were you the one that said you like RSH?
Yeah, I like it here for a short squeeze. What
Yeah,
do you
well,
think?
I agree with. I agree with that. There's looking at it. There's more potential upside than downside, strictly as a lotto ticket. And I wouldn't even get out after a certain. It's a lotto ticket. You can't return the lotto ticket. You buy it and you eat it.
You just buy it to zero. It's $2. It's a $2
buy it
call.
buy it to zero, baby.
It's a $2 call.
Here's a lesson on a couple of names you mentioned earlier. A lesson I learned: don't stick your hands in a working blender, and don't short Facebook or Tesla. Those go hand in hand, all 3 of them.
Those are your 3 rules in life. Don't stick your hand in a working blender. Don't short Tesla. Don't short Facebook. Those are good rules to live by, man. If you've been living by those rules the last couple of years, you've done really well.
Yeah. Now, Tesla, you said it's incredibly, a rocket ship, but then now it's looking a little bit red. If you look, there are a couple of periods. I'm looking at last May-ish, same looking, gap up, spike, and then sell off. Looking a flag-looking thing, and then another leg up, another leg, and then another leg up, and it's looking about the same now. So I wouldn't, personally, I don't like it. I can't see it in its current form, the company being worth that much. In Facebook, I do. And you asked how come people come out and still upgrade it. I don't want to be the analyst that said Google topped out at $110.
Yeah.
Because, Facebook has 1 billion users, and like I always say, it takes a special kind of idiot to mess up 1 billion users. So I can see the potential in Facebook, but not Tesla.
What do you make of this consolidation here in Twitter? I mean, it had the bad earnings, had the the bump from 50 to 59 and change. Now it just like the luster is off, the volume is down. Just a tremendous consolidation in it. Do you got any inkling on how to play this one? I mean, I'm looking at perhaps playing a strangle in it, but it looks like I'm just going to be paying.
Who's that? I missed the ticker.
Twitter, TWTR.
Twitter.
Oh, Twitter. Oh, yeah. Talk about a lotto ticket. Okay. Twitter is just pure speculation. I mean, we don't know how they're going to make money. I use it all day. I love it. What it does for me, but I've never clicked on an ad. I've never seen. I mean, I see the ads, but now I have to click dismiss. If I click on the ad, it's because my hand jerked and I clicked the ad by mistake when I'm clicking.
Accidental
again,
clicks. Maybe that's their market. Maybe they're just going after accidental clicks. They'll put them everywhere and make everything move a little bit on you, and the accidental clicks will work.
Right. I think Twitter is too honest in its numbers with how many people are using. I'm serious because I see people using it as opposed to other LinkedIn, for example. I know they're going to have an issue one day with counts and how many people are quote active. I think Twitter is too honest that way, but I really don't know how they're going to make money. I like the stock. I like the company, I should say. I don't like how the world sees the stock. they're almost like it fell into the Apple aura where everybody loves to sell it and they hate to buy it. Yet, it's dangerous. I wouldn't short it. You said sell a strangle?
No, 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 no.
I
I
don't
was
know.
looking to buy
Buy it.
Stranga. I'm just looking at this consolidation here, and I'm just
Oh
thinking
yeah,
that
buying a strangle would make sense,
Yeah.
but
I
not
bet you
selling
the
one for
premium
sure.
is just out of hand probably to do
yeah,
that
you need a
strategy
big
because
move.
every time I look at the option pricing on Twitter, the premiums they're asking just seem ridiculous. So it's so hard to play it that way because you're playing both a call and a put and you're buying. And I don't know, unless you sell it higher ones, maybe you just got to do like Nick would do. You'd buy a strand and then sell obviously higher to do the spread.
Okay, you
Yeah,
look.
so maybe one would plug their nose and pick a direction and go for it. You either do it long term and say, okay, I like it long term, so you plug your nose and buy some sort of a longer dated call, and hope for the best. Maybe sell some calls against it, shorter dated, to lower your entry price. Maybe makes more sense than. So basically, develop a theory about it. Okay, I like Twitter because, and here's I'm going to put my money where my mouth is, as opposed to buying a strangle and just waiting for time to beat it down.
I just want to
I
ask
don't.
you here.
I'm not.
I'm sorry, Nick. I just want to talk to you quickly. We had looked at the Goldman Sachs. We had talked about that a few shows ago, and just kind of the 160 level. And I know you were a little tapping on it because you thought if it did take out that 160 level, there wasn't a lot that you can lean on. Now we've had the run up. Is this something that you would chase a little bit, or would you wait for a pullback?
I declared that I missed it. I
Okay.
waited too long. I was right about it, that it was too soon to get in, or maybe too soon to get in. But I watched it. There were a couple of candles that blew me out. Not blew me out, like told me that you missed it, dumbass. Oops.
That's okay.
That's okay.
So, but again, look at the candles. The last three candles, the markets were so confused. Dojis, basically, opening and closing about the same level, and big widespread, relatively big widespread during the day. So everybody's saying, so far we got here as a market on the backs of momentum stocks and the biggies, the big movers, not the financials. Everybody complaining financials are not participating, and then recently the financials woke up and all the other guys starting to go to sleep. And I don't like that. Usually say buy the laggers. I don't believe in buying the laggers. The laggers are laggers for a reason, maybe. So the financials being up here, unless the momentums and Apple and Google start running up again, I think the financials are going to rejoin the party wherever the party is already left. They're like one step behind, if you know what I mean. So as a company, I still like it, but I declared that I missed it.
Okay.
I'm looking at the 1 year. If you look at it, it's got peaks, run-ups, and sell-offs consistently. So peaks and valleys, and this is a peak. If it repeats itself, there's going to be another valley. So there are other places I can put my money. So I missed it. That's the bottom line.
Okay, that's not a bad strategy. Okay, just to close out the show, is there anything? We've had the nice run up. S&Ps are trying to clear the all-time high here. Is there anything that anything on your radar as far as perhaps an entry with the credit spread?
Yeah, credit spread. Last couple of weeks I've been on. I've been telling you I'm paying my bills with some weeklies, and Google has been the method of choice because I have a clear look on it from the open interest. Short of a headline, it's got a strong resistance starting at 1220. And with Apple also, by the way, don't chase Apple too far today. It's going to pop maybe at the open. It has strong resistance at 530, 535 also probably equally strong, and 540 should be a wall. I wouldn't sell credit spreads just because of the headline risk. And with Google, I'm selling iron condors all week, every week, and it's paying nicely. With Priceline, I'm shorting it with a credit call spread every week, and now I'm up to about $1.50 in premium. And I short it on spikes and close it on the retracements. And that's like over 40% return on a $5 spread in every week. So it pays the bills. if you're an active trader. So Google and Priceline right now are my method of choice, and a little longer in time, it's Apple in credit put spread. But again, with Friday, the markets. I said early in Friday, I said Apple haters are going to owe it a big kiss on the lips by the end of the day, and somebody challenged me on Twitter saying, "How do you see that?" I said because they said it's 5:25 now or 5:26, whatever it was. I said because it's going to close around 5:30 and it's going to provide support to the market and lift it up. And they laughed. Well, it closed at 5:30 and 44 cents. So today it's going to help the market trying to go green, but I'm not going to chase it until it shows me the money because it has a habit of trying to run up and then fall back to the open interest wall.
Speaking of green, do
So
you follow the pot stocks at all?
The what? No. No, I know nothing about it.
Okay.
There, I'm on record.
Okay. All right. All right. We've had Nic Chahine creating income with credit spreads, sticking with his strategies in the markets, and relaying them to you every Tuesday here on Benzinga's Pre-Market Prep. Brought to you by Options House. Nic, thanks for coming on. We'll keep your ideas in mind and looking forward to speaking to you next week.
Highlight of my week. Thanks much.
All right.
Thanks, Nic.